just shy of its all-time trading highs. We had a really good push in the last week on gold prices. This continues to be one of my favorite trade setups at this time. So if we do see pullbacks, I will stay in the trade. I'm fine to sit through a pullback, but I do plan on stopping out of gold if needed, if we break this support around the 3120 to 3140 zone of support. So I like this quite a bit. Still bullish on it. I did get something interesting pop up on the Edge Finder today. We got a NASDAQ very bullish reading for the first time in a very long time, which, as you guys know I love trading the NASDAQ. Still some price action stuff that I think we need to chop through together to discuss a little bit. But we've got NASDAQ on the list. Hold on, I'm going to sneeze. Excuse me. So we got NASDAQ on the list. We got gold still very bullish, strong reading there. And so I always kind of have to remind myself and others how we use a top setup indication from the Edge Finder. Like, what does this mean? What does very bullish mean? Because oftentimes people do make the mistake of thinking very bullish means I'm getting long right now. I'm taking a position. That's oftentimes what, people think that I'm thinking when I see this. And while it does significantly increase the probability that I'm going to take a position, just because we get a bullish reading on the Edge Finder does not mean, oh, I'm in the trade right now. Okay. So the Edge Finder is a screener. It screens a whole bunch of data, but it is not necessarily a market timer. Like the Edge Finder does not tell you like, oh, right here, long with a stop loss here. Gold's been a bullish reading for like a couple weeks now on the Edge Finder. So it's been getting a bullish reading. So that doesn't tell you when to buy gold. It's not really designed to be that. It's designed to be a screener that uses a mix of economic, technical, and sentiment data to give us a general read on charts. So let's dissect this gold reading here, right? So I went long gold after it popped up on the Edge Finder's top setups page and it pulled back to a level that I really liked. I took an initial attempt to get long on gold right around the 38.2% retracement. So it had this big push up, it pulled back, and I went long at the 38.2% retracement. That trade stopped out, so I took a loss on that idea. And then when we spiked lower down into the 61.8% retracement, that was my second attempt to get long gold, which worked out much better. So we've got now the gold pullback that I was looking for, plus the Edge Finder reading getting a bullish, right? So if we're getting bullish from the Edge Finder, and then I have a technical setup that I like quite a bit, there's a high probability that I'm going to take that trade, and I'm going to risk small in case I'm wrong. And if I'm right, I'm going to try and let that trade run. But I haven't taken any, like NAS 100 long kind of ideas with a stop loss on it. I haven't taken a trade like that. But the setup is starting to form. And what I'm waiting for, right? You get a really strong reading like this in the Edge Finder, that's going to get my attention. Those have been some of my best possible trades in my history in the markets have been when we get a really strong reading on gold or a really strong reading on NAS, and then I can actually find a technical setup with a good risk to reward setup. I love that. And that's my bread and butter. So I'm watching for NASDAQ to break higher. I need this. This is what I personally am looking for. You may have a different style than I do, and that's totally fine. But this is for me. That Wednesday high, I need to see that wasn't just a fluke, right? What I mean by that is you had a huge surge up on the 90-day pause on the tariff stuff, right? So we had that huge surge, that really big excitement. But what I want to see is, okay, after that, we had pretty massive sell down afterwards, right? We saw the market at one point went down 7%, the NASDAQ 7% the next day. So we gave back a lot of those gains. We've been crawling back from that, right? Technically putting in maybe a higher low, but I can't really say that for sure until we get a clearing event of that spike day. So let's basically rephrase that. I am looking for this to happen. That Wednesday high, right? That big up day high. Can we break through that decisively? If so, any pullback, I am likely a buyer of that market, because then you've got a couple things working in your favor. From a technical perspective, you've got a break of this downward trend line. You also have this key notable recent high on strong volume, that huge up day. Again, what we don't want to see, what we absolutely, if you're a bull like myself, what we do not want to see is this trend line, these lower highs continue to dominate this market. And that's the risk that we have. That's why I'm not in the trade right now. The reason I'm not long the NASDAQ is because what I'm discussing is you have sellers still very strong here. Like, let's not be fooled. They are holding out really well right now. And you even had Bank of America, BAC, that's the stock ticker, which actually I think they reported their earnings this morning. Bank of America came out yesterday and they said to short the S&P 500. I don't know if I've ever seen that, or at least not in a long time. A major bank came out yesterday and suggested that investors short the S&P 500. That's a little nerve-wracking, right? You get a powerful bank like BAC, Bank of America. How did they do, by the way? Their earnings came out. They're not helping their own case here. They're up 5.5%. It's actually quite a bullish catalyst. JP Morgan trading higher here. I think we had Citigroup. Did we have Citigroup this morning? Yes, we did. They came in better than expected. So we had bank earnings. Usually in earnings season, banks kick it off, and banks are really telling. I haven't looked into this, and I will probably do so for today's analysis video. But we like to look at things like how much people are spending, how much people are saving, how people's savings are looking. All that data gets revealed in bank reports during the earnings. So it's really powerful indicators of the economy. So back to NAS, like I said, I just want to see us clear that Wednesday high, and then I am absolutely looking for longs. So if we cannot do that though, if we fail out here and we take out this low, bombs away in terms of a technical analysis perspective. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. Also, I have a CAD Swiss trade. This has been a troublesome trade for me. And when I say troublesome, in terms of margin, this could go on for a long time. I'd be perfectly fine. I have a very small 2 positions on the CAD against the Swiss franc on the long side. I am looking to scale into this trade further. This is a bit of a contrarian play, dollar cost averaging concept that I've got going on with the CAD Swiss. When you're betting on the Canadian dollar against the Swiss franc, you're betting that trade negotiations globally will improve. That's the way I would see it. If you're betting short, you think they're going to worsen, which has been, there's been uncertainty around trade for a while. So I'm on the wrong side of this right now, but I do think we'll swing back the other direction. There could be some nice gains on the CAD Swiss in the long run. But again, I have really small positions on this. and willingness to add to that if that continues to sink lower. The Australian dollar, look at this, guys. Kiwi dollar. Oh my goodness. Someone in the chat, I apologize. Who was it earlier? Cheryl's mentioned that, what do we have? She mentioned the Kiwi dollar, right? Why has the Kiwi dollar got some strength today? Is it China? Did Chinese stocks pop? Nope. Not really Chinese stocks. Dollar index didn't really sink lower. Does anybody know what's going on with the, did we get some, because it's not just the Kiwi dollar either, right? It's the Australian dollar also. And is it pound? Okay, yep. But it's not really a dollar bearish move. This is definitely something to do with just interesting. Does anybody have some insight on what's going on with the Kiwi dollar? I've been out of touch on it, but anyways, another one is Euro Pound that I'm kind of watching this one again. Euro Pound spiked way up, almost got up into this area, 87.50. I believe Top Setups Eco page. Let's flip this around. Yeah, Euro Pound, like -3 score on the Eco only comparison. If we get any higher, I'm probably going to take a short on the Euro Pound. Dollar Yen, you have to be careful with this currency pair. It moves like a monster, especially if you're trying to dollar cost average. But if we did get a swing back up here, I may take a small stab on the short side for Dollar Yen. I'm pretty selective with yen shorts simply because the carry trade is pretty expensive. Like when you're short something like Dollar Yen, it's very expensive to hold overnight. And as a swing trader, that can really stack up. So I'm really selective with yen shorts. Kiwi dollar still looks incredibly good. Obviously, I wish I had stayed in that idea. I took profits on it, but it's one of those things. This is the challenge of taking profits too soon. Now, again, I use a slightly different strategy for dollar cost averaging in Forex than I do when I'm trading like gold or silver or NASDAQ, etc. Huge move higher here. I bought around this area, went into the red, shot back up, took profits here. It's obviously kept going. But if we do get something like a pullback on the Kiwi dollar, I may look to take this trade again. We've had some pretty upbeat economic data. We can actually look, by the way, with our economic heat maps. We do have New Zealand on the list, and you can see why New Zealand dollar is so strong is you just have a laundry list of higher than expected or better than expected economic prints coming out for New Zealand. Like we had better than expected GDP growth. We had better than expected retail sales. We had inflation data that came in slightly higher than expected, which is strong for the currency. So just something to think about.
As far as currency goes, so last week was a good week for myself. I was playing long euro dollar, short dollar yen, short dollar Swiss. And my take profit levels got hit because we kind of hit those levels on the higher time frames that you kind of have to be mindful of, right? If like for the euro dollar, when we hit that 112 level, my thought process was, well, there's probably a lot of sell orders sitting right there. And so that day though, we did close pretty strongly, way above it. And so now I'm looking for potential opportunities as to where FX can go. There's a lot of momentum though, but the thing that I'm kind of just looking an eye on is, and I know I might sound like a broken record here, but tariffs. Now, the cool thing in my thought process when it comes to tariffs is this is not like one of those black swan events like COVID where you're going to have some slowdown and it's going to take a long time to recover. This is one of those things where all it takes is just one deal to be made or a couple deals to be made, and all this uncertainty and risk on comes right back into play. And so I'm being very cautious when I think like that. I'm not Filipino, I'm Mexican American, but I do get that a lot. My dad, he gets that all the time. But when it comes to, for example, the euro dollar, right, where I'm going to go down into a lower time frame here, we have this resistance level that could turn into support. So I drew like this little wedge here. Take it with a grain of salt, but I just drew it. If we get a flush down, I want to see how we react to the 112 level. Now, let's say we get to the 112 level and there's more optimism for the US. People are investing into the stock market again. Foreign investors are also investing into the stock market. When they do that, they have to, there's going to be an inflow of US dollars. So that's what I want to see here. I guess my biggest concern would be, is this break, and I'll clear this out for you guys, but is this break above the 112 going to be a fake out, or is the momentum so strong that we're going to see some continuation? So I think the safest bet for euro dollar is going to be we kind of hit this 112 level and then we see how we react from there. Euro USD Auler, if you look at technical, there's a bullish flag pattern. Yeah, it could be that's the thing, right? So if I'm just remembering how I kind of proceeded with the euro dollar, this momentum here was very strong. This one was off the back of Europe committing 500 billion euros to their defense spending, right? And so the market really saw that as a positive thing. Then we got this really brief pullback, and I was honestly hoping for a deeper retracement, maybe a 50% retracement or 61% retracement. But the thing with these markets that have so much momentum, pullbacks can get pretty like shallow, and they can get bought into really fast. And so when I saw like this level here, I went ahead and took a stab at it, and it ended up working out because at the time we were hitting the 200-day moving average. And so that was enough for me to go ahead and jump in. Same thing right here, very shallow pullback, and it just got bought into right away. So that's kind of what I'm expecting with this one. If we get to the 112 level and we see some immediate buyer step in, then yeah, I would potentially go ahead and just hit a buy right there. Now, one thing that I saw someone said, let's see, who said it? King Ahmed, he said US dollar CAD, right? That to me would be a good hedge just in case, because if we look at the dollar CAD, we're at this level that was previously resistance and now it turned into support. And within the range, right, we're at the bottom of this range. So this could be a good discounted level if, let's say, we get some more optimism in the US, more inflows in the US dollar, we could get this thing for cheap. Risk to reward wise, we have all this above us to kind of go ahead and target. You have your first target here, which is 240 pips. Then you got 400 pips above that, and ultimately 600 pips above that one. So this could be a good risk reward trade if you're early on to it. It'll be really, really nice. And this could be a hedge, right? If we do see that the euro dollar actually does fail to kind of go and proceed with that momentum, this one could really play out in favor of that. So this is one thing I might look at. Now, I don't want to be too early, and I don't know if you guys are familiar, but there's a trader called Lance Breitstein. He's a prop trader in Chicago, and he preaches being on the right side of the V, which is basically, when we get a bottoming pattern, you don't want to just jump in at the bottom and try to pick a bottom. You want to get in on the right side of the V. So basically what I'm looking for the dollar CAD, if I want to partake in this hedge, is I want to see some new higher highs and higher lows being formed. And then I'll consider going ahead and jumping in dollar CAD. Dollar Swiss as well, if that does take on and this whole like risk on sentiment becomes the new thing. Because dollar Swiss really depleted a lot because it was very risk off. So we got assets like the Swiss franc and the yen that are safe havens. The Swiss franc, especially because 25% of their currency is backed by gold. So when times like this happen, Swiss franc really appreciates. And if we look at a weekly time frame here, we see that we're very much undervalued. So this could even be a dollar cost averaging position where long term you want to target something like this, the 9,200 level, or even up to like the parity level if you want to do that. But on the flip side, to be honest, we do have all this downside that we have to be mindful of. So if you do take on this position, I think the smartest way to go about it would be to pick it up really, really small. And then if you do see some buyers stepping in and we see some bullish candles here, then at that point I would be like, okay, it's pretty much safe that we can start adding to the position. But if you add right here and then we start breaking these levels, then you could cut your loss pretty short and you have a small size, so it's not really going to be detrimental to you. Or you could just keep adding at these levels right here, the 700 level or the 7500 level. Andre, pound dollar. Yeah, pound dollar is pretty strong, huh? So for those that were patient, I know I didn't take this trade, but I know like 3 weeks ago, 4 weeks ago, we were all talking about the pound dollar and how we wanted to get to the 2800 level. So I decided to go with the euro, but for those that went with the pound dollar, if you were patient and waited at the 2800 level, I think you're in a good spot. We could target, if we do see some just continued momentum, there's no pullbacks, I would say this level would be a good take profit entry, or this one right here. That would be something I'll look for. Now on the short side, let's say we react off of this zone, like we see this very small wick on the daily, but take that with a grain of salt. We still have 7 hours for the day. If we do get a rejection, then I could see us retracing a little bit, and I guess some pullback opportunities to buy into could be maybe this 38 or I think the 50% would probably be the best. But I don't know about shorting pound dollar. It has a lot of strong momentum. Fundamentals, edge finders in favor of the pound dollar. And so you'll be going against the grain on that one. And so you could pretty much get stopped out. All it takes is some big flow and you'll definitely get stopped out if you're going against the grain on pound dollar.
Well, that would also be a look into what this market may be pricing in on gold, right? If gold is going to be seen as this like fantastic safe haven, let's go back to 08 to 2011. Did it go 600 bars? It sure did. Okay, now I'll give you your 600 bars. Okay, I will give you 600 bars. However, close, 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 close. And right now, gold does not look like that. So we have 1, 2, 3, 4 attempts to try to find some balance in this dynamic support zone, right? This is the last time that we touched here. That's when we finally hit it. And it was a lot of noise at the top. So you're right, it's 600 plus bars. If we go to the end of the year, we're going to be at 570 bars, 570 plus bars. But we also would be looking way different because I'm curious what the stretch weight move was. What was our percentage here from this high down to, so we had a move of about 20%. So if gold gets about 20% away, again, I wouldn't like sell the top, but I would just be expecting gold to turn a little bit more bearish. I can take nibbles at it. I can do a bear put spread at the high and see if it crashes, right? If we find that 200 moving average, there's plenty of distance to be right within maybe 30 to 60 days. So, I mean, and all it is just a near-term income trade to trade the technical probability. So, look, hypothetically, if we go all the way to the end of the year and gold is still not hit the 200 moving average, it's probably a trade for 2026. So I can start taking some bites, maybe some bear put spreads, probably bear put spreads over bear call spreads. I don't want to be assigned short on anything. But yeah, if we stretch to 17, 18, 19, 20% away, I'm going to get more of a, top called on gold. Okay. But good point. I'm glad you brought that up. So, it's not like 380 bars has to be a topping sign, right? But during this, this is 08 when the market was, in full, calamity. The bottom would have been September 09. So as the markets were dropping hard through 08, I'm curious where this top was. August 2011. Interesting. But what I think also is gold, when we actually stretch that way, you notice how gold didn't become a good trade for a while? Like that run up became probably a 50% pullback, right? I think I have that fib right here. It's got to be close. So yeah, we pulled back to around that 50 to 55% zone. Wow. Yeah. After topping out with a 20+% overextended move and 600+ bars. So yeah, fast forward to now. I mean, this is what I'm looking at. It's like we haven't really had, other than maybe one decent test. I would say that was our one decent test right there. So since this started, I'll give like sideways was close but still didn't touch. We've had one test, not four, right? But different market. History doesn't repeat, it rhymes. So if this gets more exponential, it's great to be enjoying your run in gold. But what's not great is at some point this probably gets so far stretched away that it's going to be a drop. Okay. So right now I'm going to change this blue line because we are not 20% overextended. But let's have a look. So from current price to now we're about 19. I mean, we are pretty darn close, man. There's 20% right there. So from this candle with this recent high, that's about 20% overextended. So it's got to be like from an extension standpoint, I think it's close. From a barkout standpoint, it has been longer. But I wouldn't be terribly surprised to see this fall. Now, what am I going to do with gold? Nothing. I'm going to hang on to it. I'm just going to stay long. Now, if we go longer, if we go out longer, and this bar count gets to 500+, I'm going to start taking some stabs at it. At the very least, I'll be protecting my profit along the way and probably start taking some income trades to the downside. So I firmly believe the technicals will win out. I think we're going to have a reversion at some point, but I'm not here to call the top. So if we go higher, that's a sign of the times. Markets are uncertain. Gold's a great safe haven, and so far still looks pretty darn good. Currencies, and I'll let you go. Aussie CAD pulling right back to the pocket. That's good. Aussie Swiss responding nicely. I need to start shifting these buy stops lower, so I'll look at doing that today. Aussie Yen, same thing, kind of a flashy crash move. Aussie New Zealand divergence on the daily time frame. I'm still going to hang in a dollar cost average as a range trade. Aussie dollar took the profit on that 60-20 buy, closed it out for 325 pips. CAD Swiss still hanging out the lows. Would love to see this one start to give me a bullish pattern so I can move my buy stops lower. CAD Yen, stay out of that one. Swiss Yen, I would stay out of this one as well. I don't know, I just would. Unless you're looking shorter term and maybe this thing turns. But I don't think you're getting the Japanese yen to act as the better safe haven. I think the Swiss is the better safe haven right now. So if risk appetite happens, it'd be nice to see the Swiss cooperate. I wouldn't be upset if the Swiss intervenes in some way, shape, or form. Last time these big interventions from the Swiss National Bank was 2011 and 2015. Other than that, they've stayed silent, and it's been one of the strongest currency pairs for the last like 3-4 years, to the point of historical lows and highs that have never been hit before. Which I think is interesting. You know, it's like usually in Forex, there's kind of a historical range that these currency pairs can kind of stay in between, and the Swiss continues to push the boundaries. Euro Aussie, we're coming right back down to, there's a lot of volatility, but high, low, high, low. It's enough volatility to make your head spin for the short term. Don't get greedy on this one. You know, if you're looking for a buy opportunity to stay with this, maybe there's a buy opportunity in this window. Confirm it on a smaller time frame. Okay, if this is a flash crash move up and this just continues to settle in, it pulls all the way back into here, maybe that's a chance to look to get long again. It's price action. Watch your levels. I don't have a good trade on it right now. EuroCAD, maybe a chance to short this one with a defined risk. If we come up to these highs, looking to short this on a smaller time frame, tight risk and reward, that's pretty asymmetric. That's not a bad trade. Confirm it on a smaller time frame. Euro Swiss, we are testing multi-year lows. I want to see if this will start showing some bottom formations. I'll move my buy stops lower. Euro Pound, holy reset. Not a surprise this one, my robot trades Euro Pound. Doesn't really go very far. This one did move about 300 pips, but it's fading. We'll probably come back to, equilibrium. Euro Yen, stay out of it. Euro New Zealand, same as Euro Aussie. Quick, it's just retreating, it's rebalancing. If it is going to be this like shift and risk on environment, then maybe this goes all the way back down to the 200 moving average, and then you can build another base right? Maybe build some more support and then take this thing higher again. Not sure. But if it's high volatility like this, I don't love these currency pairs. Euro dollar, I think we have a pullback coming with overbought conditions, DXY's oversold conditions. Pound Aussie, same thing. You know, straight up, straight down, be careful. Pound CAD, if you're looking for an opportunity here, if you didn't buy the dip, then maybe there's resistance sitting in this area. Confirm it at the highs, confirm it on a smaller time frame, stop above, and then take it back down, see if it's a range trade. Resistance up here, support down here, see if it responds on a smaller time frame. Pound Swiss looks good. Just be careful on margin. This one's still like 2 to 3 times more expensive than others, but likely with these two candles being very inefficient, I think Pound Swiss makes its way back up. So if you want to take a nibble at Pound Swiss, I think it goes up maybe 300 to 400 pips. Not a bad trade, but margin is higher. Pound Yen, I don't know, equal lows, but I don't love the Pound Yen unless you're scalping. Pound New Zealand probably making its way back down to the 200 moving average. Looking to sell, sell any rallies with confirmation on smaller time frames. Pound dollar, getting some love. This trend line support is the real deal. I said if you're buying bull flags or buying, bullish confirmation on smaller time frame, look left in the chart to get back to like 34. There's a little bit more upside, but you can look at some, shorter term confirmations, keep the stop losses out of the way. But you've had 1, 2, 3, 4, 5, 6 days of bullishness. If this runs higher, cool. Move your stop losses and trail your profits. Is it possible this goes all the way back up into the 140s? I don't know. Maybe. Or it's just a big range. That's a big high. That's a big low. We come up here. Maybe this thing tops out. There's just a potential range. Resistance, support. Dollar index is kind of playing the same way. New Zealand CAD. Beautiful move back into the pocket. This is why I leveled into New Zealand CAD. So buying the lows, had pending orders to buy the lows. Right now, this is all starting to show some signs of profit. So get back up here, get back up here. We get to 8,800. I'm taking all profits on my New Zealand CAD. New Zealand Swiss, same thing. Waiting to see if I get a better bull pattern so I can start moving my buy stops lower. But this one's likely going to pull back and find some pockets around 5,000. Hopefully we can clear 5,000. I love a bullish pattern in here. Something like this, pull back, and then a 3 to 5 wave move. Give me some profit on New Zealand Swiss. New Zealand yen, no trade. New Zealand dollar, took the profit on this one. Bought the equal lows around 5,600, took the profit. Dollar CAD, everyone's been asking dollar CAD. Look, I said this yesterday. It's a short-term opportunity if you're confirming on a smaller time frame. Resistance here to become support. That is the near-term trade. That's all I see. So if you're already confirming on a smaller time frame, stop losses below that turn, and hopefully this is going to pull back into maybe 4,000, maybe 4,200. And if you're going up, move a stop loss to break even or better. If it wants to go higher, that's fine. But this could also be a 1, 2, 3, 4, 5, and this comes all the way back into settle in around 34 to 3,200. So I've got to find a really, really clean setup on the dollar CAD. There was a short-term one just off these lows. It's a lot of past resistance. So if you're taking that on the smaller time frames, you probably have some precision to enter. Dollar Swiss, very oversold conditions. A lot of inefficiencies here. So if we get a bottoming pattern, I'm looking to see a 1, 2, 3, 4, 5 wave move, kind of repair this thing back up towards 9,200. That's the plan. Dollar yen, I'm staying out of this one. I think right now it looks like every pullback is being sold, but if you get a pullback, you can look to sell it. Otherwise, if it just goes lower and lower and lower, there's symmetry right here. Don't be surprised if it bounces at symmetry. There's the low. That was a divergent low. There's symmetry. If we hit it, short-term opportunity to look for a bounce. Confirm it on a smaller time frame, tighter risk. Try to go after a 1-to-1 or better. Move your stop losses. Trade the structure.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.